The ORB strategy has become one of the most widely used methods among day traders because it provides a straightforward trade setup every day, regardless of the asset being traded. However, despite its popularity, many traders often fall into common traps when applying it. In this video, we'll cover everything you need to know about the ORB strategy, including how to use it to find high-probability trade entries. So if that sounds interesting to you, kindly hit the like button, also subscribe and turn on the notification bell to stay informed each time we make new videos. So, without further ado, let's get started. Now, let's start with explaining what the ORB trading strategy is and how to identify it on a chart. ORB is a simple abbreviation which stands for Opening Range Breakout. As the name suggests, this strategy focuses on trading breakouts from a defined range. However, this range isn't based on external liquidity levels. Instead, it's determined by a single candle. Specifically, the very first candle formed after a new market session begins. Let's break down how this works. One of the first things traders learn is about market sessions. These are the specific hours each day when markets are open in different regions around the world. The three primary sessions are the London session, the New York, and the Asian session. While the ORB strategy can be applied during any of these, the New York session is the most commonly used because it typically brings the highest trading volume and liquidity. That's why we'll be using the New York session for this video, though the approach to trading the ORB remains the same regardless of which session you choose. So, now that we've focused on the New York session, the next step is to wait for the New York Stock Exchange to open at 9:30 a.m. Once the market opens, we simply allow the first candle to form and close. This becomes our ORB candle. To define the range, we mark the high and low using the candle's wicks, and the zone between those 2 points forms the ORB range. At this point, you might be wondering which time frame to use for identifying this candle. The answer depends on your trading style, as you can choose different ORB ranges based on your preferred time frame, even though it's always the first candle after the 9:30 open. For instance, if we use the first 30-minute candle, we get the 30-minute ORB range. Alternatively, if we use the 15-minute candle, we get the 15-minute ORB range. And the same logic applies to the 5-minute time frame. If we use the 5-minute candle, it gives us the 5-minute ORB range. The key difference between these options lies in the size of the range. 30-minute ranges tend to be much wider, while 5-minute ranges are typically quite narrow. But the 15-minute ranges strike a good balance between risk and consistency, which is why it's the most commonly used among traders. In this video, we'll use the 15-minute ORB for our examples, but the overall strategy remains the same regardless of the time frame you choose. So now that we have covered how we identify the ORB, let's move on to the next step, which breaks down how we can actually use it for finding trade setups. But before we continue, if you've been in the crypto space long enough, you know that watching charts all day isn't a strategy, it's a slow burn. That's why I've been keeping a close eye on Cortex Trade, an AI-powered, fully automated trading platform that's been gaining serious traction. And I want to thank them for sponsoring this video. Cortex runs 24/7 across major exchanges like Binance, Bybit, and KuCoin, scanning price action, volume, news, and social sentiment to make trades faster and smarter than any human possibly could. After doing my own testing and research, I went ahead and put in some money to give it a shot. And now I'm seeing the results firsthand. Profits are coming in consistently, and more importantly, I've been able to withdraw them without any issues. Investing is so simple. All you have to do is click on Make Investment. Then select Balance if you want to invest from your Cortex balance. Then, put in the amount here. I will invest more $25,000 now. As you can see, this is the amount I will be earning per day, and this is the amount I will be earning per month. Now, I'll go ahead and click on Make Investment. Once activated, the bot will begin trading and generating profits automatically. You can also withdraw funds at any time. There are no freezes, and you can withdraw both your earnings and your entire deposit in a bunch of different currencies, right to your own personal wallet. And if you're still skeptical, there's a demo mode for you to try out. No risk, just a chance to see how it works before diving in. So if you want to check out Cortex Trade, the links are in the description below. And as always, do your own research. Now, back to the video. As mentioned earlier, the first step in identifying the ORB range is to wait for the US stock market to open at 9:30. After the open, we wait for the first candle to close. In this example, we're using the 15-minute ORB range, meaning this is the first 15-minute candle formed after the 9:30 open. Once we've identified this candle, we simply draw one level from the tip of its upper wick to mark the opening range high, and another from the tip of its lower wick to mark the opening range low. Next, we can shift down to the 1-minute time frame for a closer look at market structure. Since we're using the 1-minute chart, it's important to note that trading the ORB range is essentially a scalping strategy, focused on quick short-term trades. The advantage is that the ORB often provides high-quality trading opportunities at the same time each day throughout the week. In terms of how the ORB range works, we treat the ORB range high and low as key support and resistance levels. By observing how price reacts to these levels, we can identify signals that suggest the market's next direction. The next step is to wait for price action to break above the ORB range high or below the ORB range low. A key detail is that we need to see the candle actually close beyond the level. If it only wicks past it, it doesn't count as a breakout. In this example, we can see that the candle closed above the opening range high, which confirms that a breakout has occurred. At this stage, there are two possible approaches for entering a trade. The first is to enter immediately after the breakout candle closes, as this indicates the market may continue moving in that direction. While this method ensures you won't miss breakout moves, it carries the risk of false breakouts, where price quickly pulls back into the range. If you're using a reasonable stop loss, this could close your trade prematurely. The second option requires waiting for price to pull back and retest the ORB range to see if the previous resistance now acts as support. If the level holds, it presents a better opportunity to enter a long trade. And playing price forward, we can see that price pulled back to retest our opening range high. Now, we don't just enter a trade solely because a retest occurred. We need further confirmation. Specifically, we look for candlestick patterns that signal buying interest before taking a long position. In this example, price formed a bullish hammer, followed by another green candle, indicating a potential shift in momentum. With this confirmation in place, we enter a buy trade at the close of the confirmation candle, placing the stop loss below the retest candle and setting a target at least twice the stop loss. Watching the trade play out, we can see how price respected the setup, eventually resulting in a profitable trade. Let's look at a bearish example. On this chart, we have this bearish candle as the first 15-minute candle that formed at the New York session open. So, we mark out the high and the low, which gives us the range. Once the range is established, we then move down to the 1-minute time frame. Here on the 1-minute time frame, we want to see a breakout and retest of either the opening range high or the opening range low. And as we play the chart forward, you can see that price broke below the opening range low and retested it. We also have this bearish engulfing candle, which further confirms the validity of our setup. So we just enter a sell trade at the candle close, place our stop loss above the opening range low, and then target at least 2 times the stop loss. And letting the trade run, you can see how price pushed down to our target, giving us a winning trade. So when applied correctly, the ORB strategy offers high probability trade setups every day. Now that you have learned how it works, it is time to put it into practice and watch your trading skill improve. If you found value in this video, don't forget to hit the like button. Also subscribe and turn on the notification bell to stay informed each time we make new videos.